This is Money Made Simple, the financial podcast that keeps it simple and gets to the point.
Kia ora everyone, and welcome back to Money Made Simple, brought to you by Simplicity. Today we have a very exciting and very intelligent guest, Matt Houtman, who actually heads up our private capital at Simplicity. So welcome, Matt.
Thanks, Liv. You're far too kind.
I'm kind but true. So let's give our listeners a little bit of an intro to you and why we have you on the podcast. So where do you come from, Matt, and why are you at Simplicity, and kind of where were you before here?
I started as an investment banker in New Zealand and then in London, and then one day while I was playing tennis with a friend of mine, we got talking about private equity and
As you do, right?
That's right. And
while playing tennis.
So pretty much there and then we decided to put together a private equity fund. We came back to New Zealand in 2005 and made our first investment that year, closed our first fund in early 2007. We closed another 2 funds after that, raising a total of just shy of $500 million.
So no big deal.
It was great fun. And we invested in 22 great New Zealand businesses. So it's really good.
I like that you say it's great fun, because I guess it would be great fun making money, right?
It's so cool meeting business owners and the stakeholders around businesses, so, they're in management and so on, and learning about what they do and hearing their own journey. There are so many great stories out there, and it's a privilege to be able to invest in these companies.
And coming to Simplicity, how come you moved on from the private equity kind of stuff, your baby, to coming into Simplicity?
Yeah, so I sold out of my firm in late 2018 after about 14 years. I was co-managing director of it. I just felt like I wanted a change. I basically took a year off.
So you became a stay-at-home dad?
Pretty much, yep.
Nice.
A lot of sports, a lot of making sandwiches and all that sort of stuff. And during this time, I'd spoken with Sam Stubbs, our founder, a couple of times, and he found private equity interesting, and one thing led to another, and we landed on a strategy that we felt would suit Simplicity.
And complement what I guess we were already doing at Simplicity, right?
Yeah, absolutely.
Cool. So that's a great segue onto today's topic. As much as we would have loved to just talk about Matt for 15 minutes, we are here today to talk about private capital at Simplicity, which is often referred to as a number of different things. We often talk about private equity investments. But let's start with the basics, because before coming to Simplicity, I'd heard all the jargon but didn't actually know what any of it meant. So let's start with private versus public companies or investments or capital. What do we actually mean by this?
Yeah, it's really simple. So most people will be familiar with the share market, and this company's listed on the share market. Those are publicly traded companies. What we do with private investment is that it's just investment into private companies.
Right.
So it's quite different because you can't get into and out of those private companies.
So it's what we call illiquid, right?
That's right.
Yeah. And what do we actually mean by private capital?
Private capital is an umbrella term that we use for our program. So we have 2 components to the program.
Great segue there.
Thank you very much. One is the private equity strategy, and the other is the venture capital strategy. Now, these are words that probably most people have heard. Simplest way to differentiate them is private equity is generally dealing with more mature businesses, and venture capital is primarily dealing with more early stage and mature businesses. You'd associate higher risk with venture capital. And
I guess you're just starting out, right?
Equity.
So you've got a little bit of risk as to whether a company will succeed if you're investing in those early stages, right?
Yeah, that's exactly right.
And then with private equity, they tend to be more established and maybe have been set up for a number of years already before they need that next boost of investment.
And most importantly, there's a track record of performance. So you can actually do more full due diligence on how the business works and who the people are, etc.
Okay, so we've got the basics of what private capital as the umbrella term, and then under that what private equity and venture capital mean. So let's talk about Simplicity's relevance to these topics. So what exactly is Simplicity up to in these areas, and kind of what have we done to date versus what we're looking to do?
So as I said before, we've got 2 strategies, private equity and venture capital. Starting with the venture capital, we have effectively outsourced that with funds managed by a local business here called Icehouse Ventures. They run a series of venture capital funds from what they call seed type funds, which is very early stage. You may have a business plan on PowerPoint presentation, a great idea, no business, no revenue, all the way through to you may have operations, you may not have revenue, but you're probably losing a lot of money. So it's that really swing for the fences type stuff.
So Icehouse tend to specialise in investing in that, what we call seed capital, really kind of seeding the start of these companies to be able to allow them to go to market.
Yes, that's right. And they do support after that to where they've achieved some more milestones and they're getting a little bit bigger. And so what they do is they raise a fund, so it might be a venture capital growth fund. We assess whether or not we believe in the fund strategy,
Right.
and then we would invest in that fund, and then they manage that fund by making all of the investment decisions going forward.
So we wouldn't choose which companies within that fund get invested into via that seed capital.
No,
No.
we don't. And they'll make 30-odd investments per fund.
And when we decide to invest, those 30 wouldn't be known at the time necessarily.
No, when we commit to the fund, they'll have strong relationships. They have existing rights to invest in a very large number of companies. So there's a reasonable expectation that a lot of the investments that they make will come from existing relationships. But
Gotcha.
we don't know specifically at the time we invest.
Okay. So we believe in Icehouse, and Icehouse make those investments.
Yes, that's right. Yes.
Okay, cool. And what about the other strategy that falls under your remit?
So the private equity strategy, we actually make the investments ourselves. So we've made 6 investments to date, and what that means is that we go out and we find interesting opportunities, we review them. If they meet our criteria and we're particularly interested, we move forward through to due diligence, we negotiate legal documents, we become on the share register of those companies, and then we monitor their performance going forward. So it's much more direct, it's our decision making and everything that happens after that.
And it sounds pretty involved, right? Like, I mean, you kind of brush over, we just do all these things, but these are quite involved projects, if you will. I know that investing isn't a project, but that kind of process that you go through from start to finish with a company that you're looking to invest in via Simplicity's private equity.
Yes, right.
Yeah.
Yeah, and calling it a project doesn't necessarily mischaracterise it, because it's generally something like 3 months, and then
Okay.
you've invested in this business, but then the real excitement is the journey going forward.
So in terms of these private equity investments, I think you mentioned that we have 6 so far.
That's right.
So private companies that aren't listed on the NZX, the New Zealand Stock Exchange.
Yes, that's right.
And how much have we got invested in each of these different strategies to date?
So currently we have $35 million committed or invested in the venture capital strategy.
Okay.
And we have just over $36 million invested in the private equity strategy.
Okay, so that's quite similar numbers in each.
By pure coincidence.
Interestingly. Okay. Of course, these aren't available to invest in directly, but spread throughout our KiwiSaver and investment growth oriented funds, right? And of course, although 30 million or so in each might sound like a lot of money invested, if you then compare it to our overall funds under management, which is over $6 billion and growing.
Roughly speaking, it's about 1% currently.
Right. So, I mean, it's obviously the really exciting part of the business, but the outtake here is that it's quite involved and can get us some great results potentially, but in the great scheme of things is quite a minor part of the business.
Yes, that's right.
So currently we've got 6 direct private equity and how many investments through our VC funds?
Roughly 65, I believe.
And we've talked about how that venture capital fund works. So we invest via Icehouse, who chooses them. For our direct private equity investments, which we have 6, how do we choose which companies are right to invest in and that we believe in their long-term success enough to be able to provide them that capital?
Yeah, we have a very clear investment criteria. So basically for private equity investments, we're looking for reasonably mature businesses. So one simple benchmark for that is we look at businesses with revenue greater than $10 million per annum.
Okay.
And that's not necessarily a hard, fast or bright line test, but from experience, it generally indicates that once a business has got to that level, there's a decent track record where you can actually look backwards and see how the business works and etc.
Right.
Our other criteria is we look to invest minority stakes, and the check size that we're interested in is between $3 and $10 million.
And I think one thing to mention in terms of those investment criteria for private equity, they also have to adhere to our responsible investment policy.
Yes, absolutely.
Very important one for us. And why do we only invest in a minority stake? I assume that's slightly different from where you've come from in
Yes.
terms of owning a private equity firm.
Yes. So typically the private equity model would be to have a significant minority or with contractual rights for quite a lot of control, or have outright control of the business. And the idea is you invest for generally a period of time over which you want to drive some outcomes and see some results.
Okay.
Now, that's quite a resource-intensive strategy. We've taken a different approach, and the vision for the program is to make a reasonably large portfolio of private New Zealand businesses. And in order to make it scalable, we're focusing on taking minority stakes and not taking board seats. Basically, what we want to do as part of our review and assessment of a business, as much as anything, getting confidence in what the business does and the sustainability and opportunities for the business, it's getting confidence with the stakeholders and the board and governance structure, so that as a minority investor, we've minimised our risk because we don't have a lot of control about the future.
So in a nutshell, am I right in saying we operate fairly differently from your typical private equity business, like where you've come from?
Yes.
We take a smaller stake and we take a more hands-off approach for various reasons in terms of resource, the right sizing, what our investment is versus how much work that we need to put into that. And also based on the due diligence that we've done on that company, trusting that they can go forth with the business as planned, and for our investors in those funds that this private equity then funnels into, making those decisions in their best interests.
Absolutely, you're great at this.
Well, we've got a slightly different jargon going on there. So,
and really, putting all the jargon aside, fundamentally, we want to find really great businesses and really great people who are running them and support those businesses. And we feel that if we do that, then we're very likely or more likely to get strong investment returns.
Okay, cool. So we obviously started as a low-cost passive fund manager in 2016, and that's what we marketed ourselves at. So why do we have a private equity and a venture capital strategy here? Why are you here, Matt? And are we still kind of mainly passive, do you think?
Yeah, I think the organisation clearly takes a passive approach to investment, and yes, we make active decisions on the private capital side of it. But part of it is a very important component to the New Zealand economy, and I'm speaking here more to the private equity strategy than the venture capital strategy, but those businesses are driving the outcomes for New Zealand. We have a strong mid-market. So those medium-sized businesses are really important to our economy, and a lot of them perform really, really well. And there's very good data for private equity investment in New Zealand going back 20 years of getting very strong results from investing in these good businesses.
So these businesses are not on the NZX?
And that's the absolute nub of it. There's no other way of accessing them. The NZX is very dominated by utilities, and communications type companies, property type companies. Those
energy companies, all that kind of
exactly.
thing. Yep.
Those aren't the real growth engine, if you like, of the New Zealand economy. So how do you get access to that? It's really, you have to roll your sleeves up. You either invest into a private equity fund or you do the investment directly. And we've chosen the latter.
Okay, so we do that work on behalf of our investors. We do that work to get that exposure, I guess, to that engine of the New Zealand economy that they couldn't do via investing in the NZX50.
Absolutely. And with everything at Simplicity, the number one criteria is obviously we're only doing it because we see that there are decent returns in this part of the market. And we have some advantage as a long-term investor in investing in these types of businesses.
I guess coming back where we've mentioned this before, our fiduciary duty is to provide better investment returns to our members, right? So part of this PE and VC strategy is that we believe that they will provide or add to better investment returns for our members.
Absolutely.
Yeah, and a bit of a bonus, obviously, that we can also support local businesses and startups at the same time.
Yes, that's right. And as I mentioned before, there's a distinct advantage of being a large investor, and that is that we can take an incredibly long-term view for our investments. We are literally a buy and hold strategy, which is quite unusual in the private equity space.
Right, yes, because as you mentioned, private equity businesses take a much more active approach to investing, right?
And generally try and drive an outcome over a period of time, whereas we really are positioned on behalf of the KiwiSaver members to take a very long-term view on performance of businesses. We feel that's a distinct advantage.
Yeah, I like what you mentioned there in terms of that kind of long-term buy and hold, because that's something that you'd often do when you're passively investing in index funds. That would be the long-term buy and hold and dollar cost averaging type thing.
Wow.
Yeah, I know. Look at me with the jargon, right?
That's very jargony, Liv. Goodness gracious.
But I mean, compared to what people who do know a little bit about private equity would think of that side of the business, we are actually quite different there, right? So we are a little bit unique in our approach, obviously, to private equity and the way that we also have that venture capital strategy via Icehouse rather than doing it ourselves. Does that make our vision for the future of our private capital investments different too, or is it kind of similar to what you would see in a private capital investment firm? I guess the performance, long-term performance that we look to for this side of the business, private capital?
Yeah, so we have what we call a benchmark that we're trying to beat, which I won't go into the detail, but it's based on the Morningstar Index.
Right.
And our 3-year return for the PE fund is beating that benchmark significantly, like by more than 10% per annum, which is obviously a very good thing.
And we probably need to note here, past performance is no indicator of future performance.
Absolutely not.
Our favourite little disclaimer.
Yes.
But I guess in terms of that long term, we think and believe that our prospective risk-adjusted returns will outperform that of listed markets.
Absolutely. We seek a consistent premium over time, and that's what we really work hard in our selection.
Going pretty well so
ours.
far, right? And as we already mentioned, we want to get investment exposure to more of the New Zealand economy, and we've got some great Kiwi businesses on board, right?
That's right.
And just to involve our listeners here a little bit, we are actually always on the lookout for great Kiwi companies to invest in, right?
That's right. My opportunity to plug some advertising in your podcast. We basically, for the private equity side of things, we're looking at businesses with greater than 10 million of revenue where we can take a minority stake alongside the other stakeholders. And on the venture capital side, early stage businesses, we just refer those straight to Icehouse Ventures.
So if you have a company and you're making at least 10 million a year in revenue and you think you need a little bit of, I guess, private equity injection, then get in touch with Matt.
Thank you.
His details can be found on our team page at the Simplicity website. So please feel free to get a conversation started.
And there's some more examples on the website of the companies that we're invested in to give a flavour to what we do.
Yes. Awesome. So thank you, Matt. I think we will wrap it up there, but really appreciate the 101s around this type of investing, the actual nuts and bolts of it. And also, I guess, for explaining why, despite our passive roots, why we think it's such a great thing for Simplicity to be involved in private capital rather than just the public stuff.
Thank you for the opportunity, and it was great to try and demystify.
Yes, we always love a demystification. Awesome. Thanks again. Next time, Jenny will be back in the studio with me, and we will be discussing rainy day funds or emergency funds and why they're so important, especially in today's cost of living crisis. So we will catch you next time, and thanks for tuning in. Cheers, guys.
Bye.
This podcast contains personal opinions and is intended to provide educational information only. It doesn't relate to your particular financial situation or goals and is not financial advice or recommendations. Simplicity New Zealand Limited is the issuer of the Simplicity KiwiSaver scheme and investment funds. For product disclosure statements, please visit Simplicity's website, simplicity.kiwi.